And I want to start with the budget. You will release Labor's third federal budget in a few weeks' time. We've seen oil prices surge recently, adding pressure to already sticky global inflation, while commodity export prices have fallen. How much will this backdrop weigh on your finalization of the budget?
Well, the global outlook will weigh pretty heavily on our considerations as we put the finishing touches on our third budget. If you take a step back, you see that we've got inflation lingering here in the US, we've got growth slowing in China, we've got tensions rising in the Middle East, and then we've got some longer term pressures as well. Our supply chains are straining, and the world is fragmenting and transforming, particularly in relation to the net zero economy. And so these sorts of considerations are a big feature of the discussions here in Washington DC, and they'll be big factors as well as we put the budget together and hand it down next month.
You're within striking distance of a second surplus. Are you still expecting that?
Well, that's certainly our goal. We're not quite there yet. The degree of difficulty on that second surplus has come up a little bit, partly for some of the reasons you rightly identified in your introduction. Our economy is slowing, our labour market is softening a bit. We've got all of this global economic uncertainty, and so that does weigh on our budget, but we are still aiming for a second surplus. The first surplus that we delivered last year was actually the first one in 15 years in our country. We see it as a really important way to put downward pressure on inflation, but also get our budget in much better condition as a buffer against global economic uncertainty, and to make sure that we're creating the room and the foundations to fund our priorities.
And with all the uncertainties we've just highlighted, do you expect this to be the last surplus for a while?
Oh, certainly the pressures on our budget are intensifying rather than easing as we go off into the medium term. But we're quite pleased with the progress that we've been able to make. Some savings in the budget, some modest but meaningful tax changes, and also making sure that we're taking the most responsible approach we can when we get upward revisions to revenue from commodity prices and the strength of our labour market. The revenue upgrades in this budget will be much, much smaller than what we've seen in the last couple of budgets, and that means that we have to be there will still be a premium on responsibility, there'll be an emphasis on security. We will ease people's cost of living pressures where we can with a tax cut for every taxpayer in our budget, but a big emphasis on investing in the future as well.
And with that, you mentioned inflation. What is your government doing to help the central bank in its effort to cool inflation?
Well, our efforts on the inflation front are really, first of all, making sure we're not adding to the problem, so running a very tight ship when it comes to our budget, a very responsible budget. The surplus last year, ideally a second surplus if we can get there, to take the pressure off inflation. We've also designed our cost of living help so that it puts downward pressure on inflation rather than adds to it. We haven't been sending out cheques in the mail. We've been giving people relief from their electricity bills. We've been providing rent assistance, getting the cost of early childhood education down. And what our Bureau of Statistics says about that is that all of that cost of living help that we're providing in our economy is actually taking the edge off inflation rather than adding to it. So that's really important as well.
Good to hear. Now, some economists have blamed the U.S.'s Inflation Reduction Act, amongst other government spending, for keeping inflation pretty high here in the U.S. What is your government now looking to a future Made in Australia Act? Do you see the same consequences as what we're seeing here in the U.S. with higher inflation?
Oh, no, I don't, because our investments are all about trying to make sure our economy can be more competitive and more productive so that we can grow with low inflation into the future. And also it's important to recognise that the sorts of investments that we are contemplating, they will be big, they will be substantial, but they won't all hit the economy at once in the first year. The plan that we present in our budget will be a medium-term plan, a longer-term plan. There will be some investments up front, but not all of the investments. And I think that's a really important consideration, because for Australia, our big economic opportunities lie at the intersection of the energy transformation, our resources base, our industrial composition, our skills and human capital base, our investment strategy and our advantages there. And what we're going to do in the budget is we're going to align our economic security interests with our national security interests as well. And our goal there is to make Australia an indispensable part of the global net zero economy. Not to retreat from the world, but to make ourselves indispensable to this new global economy that we're all building here, which is based fundamentally on net zero.
So critics have said you are a little late to building a green industry here, and most of the capital is being deployed here to the U.S. What is your response to that criticism?
We're a very attractive destination for capital, for good reason. In Australia, we've got some big advantages. We've got geological, geopolitical, geographical, meteorological advantages when it comes to being a renewable energy superpower, which is our goal. And we're not trying to replace private investment, we're trying to incentivise private investment. There is a lot of capital around the world looking for a home. Obviously, what the Americans have done here with the Inflation Reduction Act is a big, substantial play, which has had an impact on global capital markets when it comes to net zero. But we've got our own advantages as well, and we're confident that we can make the most of those advantages with the right robust frameworks to attract the kind of investment we need. Public investment will play a part, but a much bigger part will be played by the private investment that we're confident we can attract.
And with that, I do want to shift to interest rates. There were widespread expectations earlier that Australia's central bank would start cutting interest rates in August, but looks like those bets are off and probably happening in the latter part of the year. Is that your assessment as well?
What we try and do in Australia as government officials and as treasurers is not try and predict or preempt future movements in interest rates. In Australia, obviously, the central bank is independent. They will weigh up all of the economic data and they'll come to a decision. My job is to make sure that we can get inflation moderating, and it has come off really substantially since its peaks in 2022. And the things that we were talking about before, budget responsibility, easing cost of living pressures rather than adding to them, these are all important parts of our strategy. And one of the most pleasing things out of this week of meetings here with the IMF, the World Bank and the G20 is the IMF has actually said that Australia's budget is now the second strongest in the G20. It was the 14th 2 years ago. And so that shows we're making progress. We're making progress in the fight against inflation. Part of that is because we're making progress when it comes to repairing our budget and providing that cost of living help. That's my job, that's what I focus on. The Reserve Bank will focus on our progress on inflation and all of these other factors that we've been discussing today.
Now, on the Reserve Bank, how confident are you about the changes to the RBA Act being legislated by the middle of this year?
Yeah, obviously that's our aspiration. We'd want to see these Reserve Bank changes implemented and bedded down in the interests of certainty. We've done our best to make that as bipartisan as we can, because we think that the structure and the architecture and the future of the Reserve Bank should be beyond partisan politics. And so we'll continue to put all of that effort in the interests of passing these changes. This is all about making sure that we strengthen and renew the Reserve Bank into the future. It's been a key economic institution in our country for a long time, and we want to make sure that it is best practice. Part of that is getting the right people in there. We've got a new governor of the Reserve Bank that I appointed a few months ago. That's part of the story, but we want to make some of these institutional changes as well.
Do you expect any delays?
Oh, I'm hoping that there won't be delays, but in our parliamentary system, you play the cards that you're dealt. In our Senate in particular, there's a parliamentary inquiry going into our legislation right now. I would prefer that we were moving already rather than waiting for the outcomes of that inquiry, but so be it. You play the cards that you're dealt. In our Senate, I remain confident that we can bed down the sorts of changes that we want to see to our Reserve Bank.
And with that, I want to talk about China for a bit. Their GDP numbers came in pretty solid recently. What does that mean for Australia's economy?
Oh, well, obviously the prospects for the Chinese economy are very important to our own economy and our own budget as well. Even though that number on Tuesday came in a little stronger than people were anticipating, Chinese growth has still been off a bit. It's still been softer than a lot of us would like to see. And in our own budget, we will forecast relatively sluggish growth by Chinese standards in the budget that we hand down next month. And you can see the implications of that in the iron ore price, which has not been very strong since it came off from about $130 a tonne at the start of the year to about $90 a few weeks ago. And so you see the implications of a softer Chinese economy in our own economy and in our budget as well.
And with that, in closing, you've done the review of the Reserve Bank, you've returned the budget to surplus, you have made the Future in Australia Act, but are there any other bold plans that you have for a second term, if warranted?
Our big emphasis, if we are given the opportunity to govern for another term, we'll be getting this energy transformation right, building more homes for more Australians, making sure we get the human capital base right in our economy, and making sure that our economy is as competitive and dynamic and productive as it can be. We've got more reforms to make in the course of this term before we contemplate the next term. We've publicly flagged an overhaul of our foreign investment regime, for example. We're changing our competition arrangements when it comes to mergers and acquisitions. So we've got a really substantial, very ambitious reform agenda. The budget will be part of that, but it doesn't begin and end with the budget.
I always like to ask in closing, is there anything else you want to share with our audience before we close?
Well, I think an international and informed audience like yours needs to know how committed the Australian people and the Australian government are when it comes to being an attractive destination for investment. We want more investment in our economy. We believe we've got the best possible combination when it comes to the energy transformation, adapting and adopting technology, making sure that our people are beneficiaries of these big changes underway in our economy. And so to your informed and engaged viewers, we say that Australia is well and truly a very compelling place for people to invest their capital.